Hello all, we are happy to present our first fact sheet for Brighter Mind Inevitable Fortune Fund, our category 3 long AIF, and we have recently launched this fund and we have successfully closed this in the month of April, and post that we are happy to share that we are also in the top quartile of the performing funds during the month of April. So basically our fact sheet encapsulates the Brighter Mind's investment philosophy, which we internally call 3M philosophy. What it means is that we go for mega trends and also look for management who have execution capabilities that have shown that can be seen in their past track records, and also we focus on margin of safety for the sake of having a cushion for our investors where we focus on safety aspects also. First of all, I would like to say that what led to our top performance that made us in the top quartile. So basically we have positioned into few themes, few mega trends. For us, the mega trend is government push for Make in India, and also we have seen the recent transformation in our global supply chain where India is dominating and we are benefiting from China plus one shift. And recently we have also seen government focus on railway modernization and defense segments. So all these mega trends we have played very well, and that has led to our superlative performance. So in our first fact sheet we have outlined this and also outlined our investment philosophy and our positioning in those sectors. So coming to the positioning of our fund into sectors, our top position come from power sector. Why power? Because power is one thing that any country cannot afford to get behind it. Basically any energy starved country cannot become very big in recent modern industrial revolution, because lots of developments are happening in AI and data centers, and they are generating huge demand for electricity other than conventional demand that we have seen into these sectors. This had led to a mega trend into entire value chain of the power industry, and we have played beautifully and that has reflected in our superlative performance. So power and transmission is our top sectors where we are positioned in. Apart from that, we are also into power equipments, and along with that we are into renewable energy. And basically in renewable we have targeted the EPC space because we know that OEMs is quite ROE restrictive in that nature. So in that sense getting high returns into power producing companies is very difficult, but we can make a lot of money into the entire power ecosystem. So that is our the most heavy allocated sector. And apart from that, we have positioned ourselves in EMS and industrial machinery sector. Why? Because many things are shifting to India, and we have played this through PLIS, through sectors where government focus is very strong through PLI schemes and all to push the Make in India agenda and all. So EMS and industrial machinery is our second most heavy sectors where we have allocated a decent amount of money. Apart from that, we are into capital goods and electrical equipments that we have already mentioned that we are into the entire power value chain. And apart from that, we are positioned into railway infrastructure. Why railway? Because lots of modernization is going on in railway sectors, and government focus is quite clear into that sector, and we have benefited immense from the companies who are catering to those sectors. We can see the order books getting inflated in those sectors. And also we are into precision engineering because as we know, India is the third largest aviation market, and lots of demand are getting generated for precision engineering and MRO space. So we have also captured in our positioning in AIF. Apart from that, IT is a small tracking position for us because of the tariff troubles and we are wait and watch mode. As the things improves, we'll go for companies who have decent cash flows and decent valuations. Apart from that, specialty chemical is a small tracking position for us because we all know that sector is getting bottoming out from financial performance perspective. So all in all, we are into 6 sectors where our 70% of position lies, and we are basically we are having 43 stocks that is well diversified. Why 43? Because what we have learned from our experience in the past that after 42 once we invest in 40 to 50 stocks, 90% of our diversifiable risk is getting diversified. So taking safety as our prime objective, we have also ensured that the client's investment risk profile goes down for our clients and all. So average positioning size, if you talk about, we are into 2 to 3% of position size for each stocks, and once the outperformance comes, we try to write on those performances. And coming to the market segmentation of our allocation, so basically we are into 90+% into a small and mid cap space and a small percentage in large cap space. space, approximately 2%. So why we have chosen the small and mid cap to play our first flagship fund? So basically what our belief is that small cap and mid cap space truly represents India, and we all know that in the troubled global environment, India is a place where one can look, and global funds will also look to coming into Indian markets and all for the macroeconomic stability point of view. So playing mid cap and a small cap, obviously valuations are slightly elevated, but we try to ensure that we do not overpay, and we try to build, as we have mentioned, that margin of safety is our cornerstone of investing philosophy. So we try to not overpay and buy those companies who are quality in nature and where growth is in sync with the valuation. So a small cap and mid cap are often perceived as a risky space, but in our belief, risk lies in the not in the size. Risk lies in the business model of a company, and obviously risk lies in the product relevance that the company offers. So with this belief, we have positioned ourselves into a small and mid cap, and we have taken ample care of mitigating the risk through diversification and through having sectors that are non-correlated in nature. So these are our major positioning in our AIF category 3 fund. So looking at the performance of our fund, which is in the top quartile of the category 3 long AIF funds, so we have outperformed the market with a huge gap of 10% alpha in last 2 months, and the alpha is getting created because of our concern for safety, because of our concern for not overpaying into stocks, and that has led to massive outperformance for our fund. So coming to the contribution from stocks that have led to this superlative performance, at least 3 stocks are currently generating more than 50% returns, and between 5 to 7 stocks are above 30 to 50% range, and 7 stocks are into 20 to 30%. Coming to the drawdown positions, very few stocks are into red in our portfolios. Obviously we have tried to cap the drawdowns in our stocks, and few stocks maximum drawdowns, if you talk about, that is mostly 11%, and that is also recovering. And coming to the portfolio snapshot of market cap segmentations, in terms of value, 18 stocks are in between 1,000 to 5,000 crore range, and obviously 10 companies is between 5 to 10,000 crore. So obviously these companies are growing in nature, and due to a small base and their agility to move according to the challenging environment, we have preferred this space because they are more agile and they shift their positioning very quickly in terms of business strategy and all. So that's augur well for our investors, and we try to build investors. So we have ventured into that, and we try to avoid the very high market size companies because we all know that from that high base it's very difficult to generate superlative returns. So coming to the summarization of our philosophy, our positioning and our vision, we try to invest in companies that grow 2x faster than the GDP. Obviously we are talking about the nominal GDP growth rate, and trying to invest in quality company that ensures the business sustainability and return sustainability for our investors, with keeping valuations in mind. So that is all for our first fact sheet that gives a glimpse of our extraordinary performance that we have done in the month of April. Thank you all.